It's another Sunday. We're drinking the bubbly. For those of you that may or may not know, bubbly is indeed a PepsiCo product. Look at that. This is the cherry variety of their sparkling water. Do you like bubbly, or are you more of an AHA person, or maybe you're more of a Perrier person? What's up? I'm Russ. Thanks for swinging on by the channel again on this Sunday morning. We're going to hang out for a little bit. Got Warren Buffett. If you don't know, Warren Buffett just put out his 2022 annual shareholder letter. And I mean, just thinking about it before I was going on, Warren Buffett is arguably the greatest investor of all time. And he's literally sharing little bits of wisdom from his, 80 plus years of investing with all of us, the common people. And this can make us better, smarter investors. We'll lose less money. We'll reach our financial independence goals, whatever that may be for you, whatever it is. Shoot it in the comments below. We'll eat those faster too. We'll reach those goals faster, and we're just going to lose less money, hopefully, and have more of a better plan and just be better, smarter, more informed investors when we listen to someone like Warren Buffett. So if you don't know, if you haven't had the pleasure of reading, good morning, everybody. Good afternoon, good morning, good evening. And if I don't see you later, good night. Shout out to, not Bruce Almighty. What movie was that with Jim Carrey? That was Truman Show, right? So good movie. Shout out. I like that. That's an underrated Jim Carrey movie, I think. Although I do love Ace Ventura, that one has always gotten to me. So yeah, if you don't know, if you haven't read any of Warren Buffett's shareholder letters, they are super duper easy reads. I would highly recommend that you read them. I dropped a link in the description below where you can indeed check out his shareholder letters that you see right here on the screen, right on Berkshire Hathaway's website. They have them all for you to peruse since 1977 when Star Wars came out. And yeah, just click on it. Really easy reads. This one from this year is about 10 pages long. I have a little bit of the slides are prepared for you. And yeah, it's just really cool. Really, really nice how he writes. He always says that he writes like he's writing to one of his sisters and tries to make it easy for them to understand. Sorry, playing with my phone there. So yeah, definitely check that down in the description below. You'll get to see Warren's letters. So yeah, you guys are here. We got 10. Let's go. We don't need any more than that. We got 10 people. Sip of the bubbly, and let's and away we go. Who used to say that? Away we go. I don't know. Bubbly, Pepsi sponsored Steve's kids soccer team. Well, I'm loyal to Pepsi too. Hoping that free cash flow payout ratio comes below 100% sooner rather than later, because as you know, we talked about, it's got me nervous. It's not an automatic sell, but it's definitely something to be aware of. So here we go. Check this out on slide number 1. This is just going to be some thoughts that I pulled from Warren Buffett's latest shareholder letter. They always drop it on a Friday because he wants everyone to have time to digest all the news over the weekend, not have to worry about the market gyrations, scaring you out of position or whatever. So check that out. The column on the left is Berkshire's gains, their overall gain from 1964 to 2022, only 3,787,464%, compared to the S&P 500, 24,708%. So that right there is pretty good, I would say, wouldn't you? But still, you can't, 24,000%, still good. Look at this. I'm not going to read all of these again. We're going to just keep this abbreviated. You can, yeah, I agree with Rocco. You should own it. Well, I thought he was saying read it. Anyway, you should. Most of us don't even know that we own shares of Berkshire because we have it in a mutual fund and such. But right here, I love this. This one speaks to me where he says, we are understanding about business mistakes. Our tolerance for personal misconduct is 0. And as an investor, as I grow, this is a direct shot at management of a company. And if a company is going to be doing Okay, so business mistakes happen. Obviously, Warren Buffett has made a lot of business mistakes, and you can't predict the future. You can't always predict what's going to happen. Those things happen, and they are forgivable. But like he said, personal misconduct within a company, their tolerance is zero. And it's one of the reasons why I sold my few outstanding shares of Norfolk Southern. The way that they didn't show up to that town hall meeting, man, that just left such a bad taste in my mouth. And I was like, I'm out. I don't want that from my management team. Next, interesting, they also say that please note particularly that we own publicly traded stocks based on their expectations about the long term business performance, not because they look at them for good vehicles for purchasing and selling and trading. And that he again stressed the point is crucial that Charlie Munger and Warren are not stock pickers, but business pickers. And we kind of talked about this on Ryan's podcast, and I mentioned it that with Intel cutting the dividend, it's not an immediate hard sell. I want to look at the business, and you always got to ask what's going on with the business. You're not just buying a stock ticker, you're buying an actual living, breathing, functioning business. So I thought that point was really cool. Later on, then he says that our satisfactory results, and I see Casey in the chat. This is something that her and I have talked about, that our satisfactory results have been the product of about a dozen truly good decisions. That would be about one every 5 years. So Warren is saying they don't have amazing, great track record, that they're just picking winners left and right. That look at that, about a dozen really good decisions is what has driven the overall performance of Berkshire. And yeah, all their other little businesses contribute, but really the heavy lifting is done by about one good idea every 5 years, which is crazy to think. But again, words of wisdom that we should pay attention to, that we can use. Also, love this, talking about the dividends. You know, I love that. Where the cash dividend they received from Coke in 1994 was $75 million. And by 2022, it had increased to $704 million. I'm not smart enough to do that math, and I didn't bother to figure that out for you using my handy dandy app. That's the differential calculator. But then he also goes on to say American Express, sorry, the duck head is blocking it, but American Express, kind of the same story. Their dividends from American Express went from 41 million to 302 million. Just checks that they get to catch. And I'm blocking you guys here. Let me move myself for that last one. The dividend gains, though, he says, are pleasing, but they're far from spectacular. And over time, it takes just a few winners to work wonders for your portfolio. And that's what Casey, shout out. You've been really helping me to think about too, is just finding those couple winners and letting that do all the heavy lifting of your portfolio. See if we can pop myself back on there. Get off of there, you guy. Here we go. This one is what was in the thumbnail, where it said 100% misleading. I thought this was really, really cool. So the company's operating earnings, right? That is the measure of profitability after just what it takes to run the business, but before you spend on interest and taxes, your interest payment and taxes. So operating earnings is a very, very important number, I think. And they want to look at it because with the generally accepted accounting principles, or GAAP, meaning what they kind of have to tell, like he says, under the earnings in billions, they're required to report. Look at those numbers. I wish to God my mouse worked here, but 5.5, negative 43.8 billion, negative 2.7 billion, and plus 18.2 billion. Those are the GAAP numbers they have to report. But when you look at just the operating earnings, it's a different story. It was plus $30.8 billion compared to a negative 22.8. And check that out. The GAAP earnings are 100% misleading when viewed quarterly or even annually. And he says their quarter by quarter gyrations, regularly and mindlessly headlined by media, totally misinform investors. So I think that is just a fantastic point. And we'll see on the next slide here. No, it's fine. You can't. Sorry, we were having technical difficulties earlier. I dropped my mouse on the floor and it wasn't working. So anyway, um, back to that. So there's that number, right? So right on the right where it says gap earnings, we are required to report. You have right there, that is what they're required to report, negative $22.8 billion. But when you look at their operating earnings, and that's because this includes, let me bring myself up big for you for a second to make this point here. So that gap number includes all the equities that they're holding, whether they've gained or lost in value. Even though it's unrealized gains or losses, they have to include those. So this is something that's really, really important. And I think it's just something to get in the habit of looking at is their operating income, because remember, a lot of businesses, they invest in other companies, but they have to include that depending on the ownership percentage that they hold. So just a few more of those. Let's get to them right here. So there it is. That is the number that they have to report, that negative 22.8. Sorry, everybody. I keep putting myself on there. And then this one's a little bit longer, but at Berkshire, this is where and you hear people talk about this, the buybacks. He said, we directly increased your interest in our unique collection of businesses by repurchasing 1.2% of Berkshire's outstanding shares. So you don't have to do anything. You have an increased stake in the business. And with Apple and Amex, repurchases also increased Berkshire's ownership without any cost to them. And because we own Berkshire, that also increased our ownership in those businesses. And again, he said, when the share count goes down, your interest in our many businesses goes up. And when you are told that all repurchases are harmful to shareholders or to the country or particularly beneficial to CEOs, you are listening to either an economic illiterate or a silver-tongued demagogue, characters that are not mutually exclusive. Dude, that's definitely a swipe at a lot of politicians that say all buybacks are bad. And he in here tells the only ones that it really hurts is when you buy back shares and the stock price is overvalued. It hurts all the existing and people that continue to hold shares, but the ones it is beneficial to is the people that sold the shares that they bought them from at those inflated prices. And we just have two more here. Warren's been investing for over 80 years. And he has yet to see a time when it made sense to make a long-term bet against America. Obviously, most of us have a home country bias, but again, I know everybody likes these. He even said right there, self-criticism, self-doubt, we love to do it, but doesn't see a point where it makes sense to bet against America. And then I thought this was kind of funny. This is Charlie Munger. Some of his thoughts, again, read the annual, at least the shareholder letter. You don't have to read the report. And I'm going to get to your comments in a second here because we got I think one more slide. The world is full of foolish gamblers and they will not do as well as the patient investor. That's easier said than done, something I'm trying to incorporate. Charlie also said, a great company keeps working after you are not, and a mediocre company won't do that. That's kind of also in the same vein of time is the friend of the great business, but the enemy of the bad business. And you also have to keep learning if you want to become a great investor. And when the world changes, you must change, which is funny because the world started changing a little bit with crypto, right? And I love to see them stick to their guns in that regard, that they didn't change with it in that one. Because why? You can't value crypto. There's no intrinsic valuation to it. And this is the last one that kind of made me laugh, that Warren accounts him making it to 92 and Charlie making it to 99 because of the nourishing peanut butter, the nourishing peanut brittle and chocolates. So what else but candy from C's could account for that? So I thought that was pretty funny. So those are some of my thoughts. I'd love to know if you read the letter, what was some of your favorite takeaways? And before we get too far deep into it, check out my guy Jason's channel, Freedom Stacker. YouTube channel, talks about the coins, the money. And dude, I'd love to know your thought. What do you think when Warren and Charlie say they talk bad about gold and precious metal and say that it has no intrinsic value in and of itself, that an ounce of gold, 1,000 years from now will still be that ounce of gold. It doesn't produce little flakes of gold every quarter or every year. It doesn't grow itself. It doesn't get any bigger. I'd love to know what you think about that. And let me know, man. But again, thank you so very much for your kind and generous donation. We really do appreciate it. Thank you so very much, man. We appreciate that around these parts here. And I'm gonna beat Mr. Who is it? Mr. Ryan Williams. There we go. I'm not gonna get too far behind. All right, what did we buy here? So what have you guys been buying? What have you been doing? What do you want to say? Open it up. Open the floor. How about some dividend stock news? Let me get through a few comments. We'll pop on for some dividend stock news. And yeah, let me know if you like that. At times I feel like I'm just talking at you guys too much when I do these presentations. I've thought about, because I'm trying to think about people that miss the stream and are going to watch it tomorrow or later in the week. Like, they're really not going to care, while I care right now. Hey, what's up, guys? Good morning. Hey, how's it going? Yeah, it's a nice sunny day out. You know what I mean? Like 3 days from now to that person, like that means nothing to them. So I don't know. That's kind of my thoughts about why I just want to like have just a little bit of content right at the get-go and right off the hop. Maybe not go 15 minutes. That might have been too much, but let's see. Kevin, what's up, man? Kevin, thank you for stopping by. Bud, bought more Pepsi. I need more of these little videos that I play out here. Stuff like, what did we play? Stuff like Macho Man with the, here. Oh yeah, dig it, yeah. Like that. Just, I don't know. I got these little video clips I can upload to this thing. And yeah, nice. I still think PepsiCo's a little bit overvalued. And if they fall below 150, I'm going to start buying them there. Maybe a few more. We'll see where the portfolio's at. But that's kind of my thoughts on that. Casey, I see you got a bunch of comments. I love it. I love it. Chris, looking to add a few more shares of UNP. What do you guys think about Norfolk Southern? Let's see. Yeah, Berkshire shows you the magic of compounding. And they've had a lot of mistakes too along the way. It's really been, Buffett selling TSM so fast will be a mistake. Interesting. This is something we've talked about. Like, I think they have a huge semi-moat now, but will they in 5 years or 10 years? And it's funny when we say Buffett selling TSM, like, I don't necessarily think that may have been his move, because in some of the annual meetings, the shareholder meetings, people have asked him, like, why did you buy this? Or why did you, I think one time there was a REIT that they invested in. You guys may remember this, or correct me if I'm wrong, but there was an investment that somebody asked about, and Warren said, I don't really know about that. Like, that wasn't me. And I think he said it was either Todd Combs or Ted Wexler. So Wexler. I don't know how to say it. That's my accent getting in the way. There we go. It's probably worth owning a share of Berk just for the ticket to the Omaha entry every year. From what I've heard from a few different podcasts, it's actually easier than you think to get in there, because people have extra tickets. So I think there was one of the pubs that people meet at, and I've thought about going to, but it is crazy. On the We Study Billionaires podcast a few months ago, they talked about the Berkshire meeting. And I think they said one of the bars they met at, they just had a basket at the front of the door, and there was just dozens of extra passes, because sometimes they would get 2 passes and there's only one person. So they would just leave the pass. So you don't even need it. But yeah, I'd like to go. And of course, like, dude, 99 and 92. Don't know how many more of these we have. But from what I understand, hotels are insane. Like, it literally is an arm and a leg. And even if you think you're going to drive like 2 hours away, still really expensive. So maybe if you know somebody that lives in the area, I don't know. Yeah. And exactly. That's what we've been talking about, right? Just find those really big ideas. And it's easier said than done, because we know that Warren he'll look through thousands of ideas, and I might run a screener and just do a few and be like, oh, that one looks kind of good. But that's something that we should try to be disciplined on. And just really interesting, right? One in every 5 years. He said there's really only about a dozen ideas that have done the heavy lifting for. So that one, yeah, that one really spoke to me too. I like that. And yeah, there you go. That to me, Casey, I don't know if I'll ever be there with just 4. That is super, super high conviction. And not saying it's wrong. It's just I kind of like owning a lot of businesses too, which I think could be my way of why I'm diversifying more into SCHD. And a lot of those big, safe blue chips I like, they're inside of SCHD, right? Including PepsiCo, one of their top 10 holdings. So I still like that. And yeah, same thing. Cisco, they're in SCHD. So I think you guys, as you watch me evolve, you're going to see me selling more of the overlap with SCHD because I also hold that in the Roth. I'm building it in the Roth, so I'll never pay any taxes on that ever again. And I know there's good and bad to that, but what do you think? What is your thoughts on owning? I'll take you, Chris, with Cisco. What is your thoughts about owning Cisco outright and then owning Cisco inside of SCHD? I'd love to know that. And Casey, always love it. Berkshire always does a good job of sensibly adjusting numbers, but it's so important that investors be able to make their own adjustments to gap figures. Yeah, so that's kind of funny that you say that, right? Yeah, that makes sense. So they kind of did their own gap. They adjusted the gap earnings kind of in the opposite direction to separate the equity holdings, like the realized and unrealized gains, from things that they didn't even sell, but they have to, right? They have to do mark to market, I believe, at the time that they file with the SEC. And I mean, it could be crazy. So you could have a position that shoots up 50% the next day, but at that time of the filing, you have to show that that you're at a loss. So it's what it is. And just as always, just great point. You have to make your own adjustments to the gap figures. Figures. I think that's FIGGERS. Yeah, Berkshire. Yeah, they've been pretty open about how ethical they want to be, but they also say that when there's a city of I forget how many employees they have, but I think it was 200,000 amongst all the businesses. He says somebody is going to be doing something wrong, but if they know about it, that's when they'll take action. But it's just going to happen. It's just part of it. But you don't want the culture of corruption, I guess, at the top, right? Here we go. New buys. Let me take a sip of my Dr. Seuss cup here. Oh, the places you'll go. This is the, I don't know where the start it is. I could give you guys a little bit. There are points to be scored. There are games to be won. And the magical things you can do with that ball will make you the winningest winner of all. There is fun to be done. Oh, that's the start. There's fun to be done. There are points to be scored. And it just keeps going round and round and round. There's a little bit of Dr. Seuss motivation for you. That's the hard-hitting stuff you get here on the Dapper Dividends. Almost said podcast. YouTube channel. Let's see. You guys want to do some news? Let's do some news, right? Let's see. I'll get caught up and then we'll do some news. We'll let a few more people filter in some of the dividend increases. Let me know which is your favorite. Any new buys? Yeah, I'll be sharing it in the newsletter again. If you want everything that I've bought or sold or dividends received for the week, trying to get that thought in the beginning a little bit quicker and more potent and a little more light, I guess. Not something really heavy mental calorie type thing that it takes to digest it. As far as no new positions, but I did add to Algoma Steel. I added a few more franchise group, ticker FRG, and then some more TD, a couple more O shares because I'm close to 100. I think I have 97 now, but I'm stubbornly trying to wait for like $63 a share on Realty Income. I think I had it written down somewhere. Anyway, check out the newsletter later if you want everything. I'll have that coming out tonight. Nice. Oh, Rocco. So you've been to the shareholder meeting. Any thoughts you'd like to share with that? Yes, Kevin, he does say crypto is doo-doo. And yeah, Munger wrote an absolute hit piece on crypto for the Wall Street Journal. Dude, and the beautiful thing about Munger at his age, he doesn't care. He's on his way out. He's got one foot in the grave. More than likely. So yeah, he's like, I don't care. I'm just going to speak my mind, whatever. Shamir, greetings from Canada. What did you think about the the Ryokan curse? The case of the Ryokan curse. That's the reason that there's been no Stanley Cup winners from Canada since 1993, because that's when Ryokan came out as a REIT. They're an interesting REIT from Canada. Shout out if you guys own Ryokan. Let's see. Yeah, he's never been a fan of gold, but he does love Bitcoin. Yeah, digital gold, kind of the same concept, right? A little bit easier to store. Nice, listen to them. Let me see. I think I'm almost caught up with you guys. I love it, man. Here we go. Chris says the interactions on these. Okay. People that miss the streams, they have the regular videos to watch. Interesting. That's something I'm going to think about, man. Because like I said, I kind of felt it today when I'm reading it. I'm thinking like, is this getting too boring because I'm not interacting? But then I also think like, I don't, would you guys watch if a YouTuber just did like, Nora the Stock Explorer, she does that. She'll just have like Tuesday morning stock chat. We're just talk about whatever comes up, like no direction. Maybe I could do that more. Maybe the next couple Sundays, we'll just do some dividend stock news and then just go off that and just talk about that, Yeah. Okay. Yeah, man. I see. This is really helpful to me. This is really helpful. Thank you for showing that. I do want to get better at this. So I don't remember who it was, but I had watched something, and that's why they said on your live streams, you should have content in the beginning and then you jump right in, for people that want to watch. So, maybe we'll do it. We'll just do that. No way. I'm guessing that's NSC, Norfolk Southern. Did they really have another derailment? I missed that. I was at a get together, a little bit of a party last night. So I missed that news. Bought 13 shares of Union Pacific. Let's see. Nice. Yeah, I sold those. Unfortunately, I wish I would have held on to those instead. Let's see. TSM is building 2 huge fabs there in Arizona. Great point. Also with Intel, they're building the fabs. They've got, I talked about it on Ryan's live stream that, from a business point of view, I think Intel cutting their dividend was a really good decision as a business. Like, yeah, for dividend income investors that bought it just because of that yield, which goes to show you, don't ever buy a dividend just because of the dividend or just because of the yield that they're paying, because that can go away and change quickly. But they're saving $4 billion on the reduced dividend now. They have, I think, $12 billion of debt. I think, what else do they have? $52 billion CHIPS bill was passed. They're getting a chunk of that. I think they're going to be growing. I think this is going to help them grow faster and be more competitive. We'll see. They still have to produce the technology. And yeah, I didn't even know, where was that derailment? That sucks, man. I hope nobody was hurt. What do we think of Kroger? I think they're always going to be there, always going to do well. They are always going to have people shopping there, but their margins are razor thin from grocers. I know that. Yeah, I don't know. I don't invest in them outright. I've got Albertsons, which is being acquired by Kroger. And here, let me stop here. We'll do, how about some quick dividend news? Need like a news stinger or something to play that, right? So by the way, also I have a link in the description below. Let me share the entire screen here. So this is what we want to show. So this is marketbeat.com. I have a link. This is all the recent dividend increases. There are a ton that Simply Safe doesn't share, but click on it, go through it at your own rate. check out all the dividend increases that happened lately. And here's ours. There's been a lot. So how about quick run through these rather fast? Home Depot, 10% increase. I'm sure most of you heard that. Walmart now is a dividend king, 1.8%. That yield still small, 1.6. And it's hard because, you got to think that, oh, I didn't share it again, did I? I caught it. Look at that. Well, everybody, sometimes we start moving too fast here. You get what you get. So here we go. You get a little bit of the streamception. But as I was showing you on Market Beat, you can go, there's a link in the description below. This is why I have the phone open next to me, because I'm old school and, we need help. So yeah, check it out for yourself. And then here we go. The dividend increases. This is what you need to see is that. There we go. You can see it a little better. Home Depot raised their dividend 10%. And as we were saying, Walmart is now a dividend king. That's their 50th straight year, but only a 1.6% dividend yield. Really, really small. Norfolk Southern, they gave them just reinstating that they don't think that this is going to affect their dividend, but still for me personally, not happy with the way they were handling that. Let's get to a few more. Genuine Parts. I have one thing to say about Genuine Parts. Remind me if I forget, because I'm going to be selling them. Raised their dividend 6.1%, 2.13% current yield. There's the dividend cut from Intel. TJ Maxx. Look at that. Who shouts at TJ Maxx? Who stands in front of TJ Maxx shouting at the store? Let us know. You might need help. But that treasure hunt strategy, I think that was pretty fun. And that's what it feels like when you go there. You never know what you're going to find on a good deal. So TJ Maxx looking at a 13% dividend increase. Let's see what else here. You can pause these if you want to. Imperial Brands, that's tobacco. They upgraded their dividend safety score. M&T Bank raised their dividend 8.3%, which I believe is another Berkshire, right? 3.33% yield. Interesting on them. A couple more banks. Old Republic, 6.5% raise. Excel Energy, 6.7. Newmont cut their dividend. I think they have it's variable. So the variable rate dividend, I think, could help a lot of businesses. And I wonder if some of these tech companies might be better served going to a variable rate dividend. Like if the dividend is going to hurt the growth of the business, it just doesn't make sense. Eaton, shout out. I'm up over 100% on Eaton. I've been holding them for a while because I understood them. Wish I would have bought more. And look, dividend yield is 1.99. I think my yield on cost is like 4.2%. So that's pretty outstanding. Essex, the residential REIT, raised their dividend 5% for their 29th consecutive raise. Looks, I think Darth Dividend owns them. A couple more. Prologis, 10% raise. So their dividend yields up to 2.87%. This looks interesting. We do a lot of work at Prologis buildings, so it's a business I know well, and I do own them in a couple funds, I believe. So I have exposure. Albemarle, 1.3%. Yeah, that yield is 0.64%. That's the lithium company. Aerospace company, L3 Harris, 1.8% raise. And I think we've got downgrade for MPW. We've talked about them. And then they also downgraded, interestingly, 3M down to 60, borderline safe from 75. So they're already, I think Simply Safe is learning their lesson with some of these cuts, and they're thinking that, they're trying to get ahead of the ball and being a little more like, All right, let's see. Shamir, take advantage of the ticket to Omaha. Yeah, I don't know, man. I also like the comfort of my own home thing, and it's not like you're going to get to meet them, but it is meeting other investors and hanging out with people, and it's just, I don't know how crazy the booking looks. I'm in Chicago, so I'm a ways from Omaha, so it's not like I could just do that and come back. Yeah, talking about Kroger. Yeah, the small margins. That's most grocery. I mean, that's to be expected. So it's kind of like that risk reward trade-off, right? You are also High debt. I haven't really looked at their debt. Do they? No, what was I going to talk about? Oh, genuine parts, GPC. So here's the thing. I have 5 shares of GPC, and that is in my self-directed IRA. What my plan is, because I believe they go ex-dividend on the 3rd or the 2nd, I'm going to sell those 5 shares. I'm way up. I think my yield on cost is just north of 3%. And I'm going to be buying more Main Street Capital inside of the Roth. And they go ex-dividend on the 7th. They're a monthly dividend stock, Main Street Capital, monthly dividend payer. And they've just been doing well. They're going to do well in this high interest rate environment because they lend money out. They have a lot of floating interest rate, floating, how do you say it? Floating rate loans that are out. So they can raise as interest rates go up. Let's see. To Tommy, my friend. Tommy, you guys remember Tommy Toys? Are they still around? Who owns Tommy Toys? Very interested to add new stock. ESS down to 200. Yeah, you know what, man? For you, I will look up ESS. Let's see if we can get it right this time. We'll show the, and do this. Yeah, I know what I did. I didn't click. All right, here we go. Hey, old dog still, here we go. Essex Property Trust. So they get a dividend safety score of 93. Let me hide your comment. Sorry, guys, to bring you here. Sorry to do that to you, but such is life. 4% yield, so it's way above their 5-year average. Let's see their dividend growth. Yeah, 28 years, looks solid. Residential REIT. This is an interesting one. I might have to dig into them more to have more exposure to that. They're going to go ex-dividend March 30th, currently paying $2.31. And, look at that. I wonder why. That dividend yield is 34% above the 5-year average. Well, I mean, I think I know why. It's because the risk-free rate, the bonds and whatnot, those are putting pressure on dividend stocks, right? Because there's more fluctuation in the share price you have to worry about. It's a lot riskier. But what bonds don't have is you're going to get your initial investment back plus the 4.5%. It's not going to grow. You're not going to get more than that back, where these companies are reinvesting into the business. So they're going to be able to grow their share price and hopefully grow the business, which will grow the capital return to you through, or your total return. But yeah, interesting. So 34% above. Yeah, the AFFO payout ratio, only 70%. Again, we don't look at that for REITs. We look because depreciation and all that. So we look at the AFFO, 70%. Nice. I mean, that is low. Looks like a solid company. I got to say, this is the most I've ever looked into ESS. Their, AFFO per share keeps going up and to the right. The growth is down a little bit, but in this environment, and dude, they are not even really diluting shareholders. That's interesting. So they're able to grow the business without having to sell more shares. Nice. Let's see if anything jumps out. Operating margin, 32%. Solid. Net debt, 50%. Hey, you know what, man? I think this definitely looks like a thumbs up. And let's see what Alpha Spread, just for grins, gives ESS for a, come on, make me type the whole word out. Let's see what they give them for intrinsic valuation. $215, so about 6%. Remember, there is no exact intrinsic valuation because it's all built on assumptions. Bear case 194, so about 50%, 15%. So, dude, I think, my friend, I think you're spot on. I think it's time to put ESS on a watch list for under $200 would probably be a really good margin of safety. I like that, man. They had issues with silver, right? Once upon a time. Nice. Doesn't like gold, but he does like silver. I don't remember what they did with silver. There was some debacle they had with silver, I think. I don't know. I may be thinking of something else. Nice. Referring to my question earlier, SCHD is the way he owns Apple. Yeah, I'm just a lot of the big blue chips. I think I'm just gonna start consolidating them, just sell them off and buy SCHD in the Roth. Make it easy. Let's see, because I asked the question like Cisco. Apart from me, it's like who doesn't own SCHD these days? Yeah, it's just because it's the easy button, right? It's the easy button. Like it in Cisco. Yeah, because I asked you guys about Cisco, I don't know how long ago now. But yeah, what do you think about owning Cisco outright as opposed to owning it inside SCHD? Well, I did that ex-dividend ad. I sold most of my Cisco and I bought a few other things, but I've also bought SCHD with that. So I thought I was selling a little bit high, but you know, there we go. Things Google's cheap now, loading up. Any worries about AI and Microsoft trying to go heavy after they have a lot of market share to lose, right? Google, because they're the dominant player. So I don't know. I'd be interested to see that. You have BlackRock and SCHD. You like the comps and the moat. Have a smaller position for dividend portfolio as well. Cool, man. Yeah, I still have some Cisco outright. Not much, but yeah, owns Apple through VU. Hey, and there's such a big portion, right? Because I think VU is market cap weighted, right? Meaning that the bigger the market cap, the more that they're going to get, the higher that they're going to make up a percentage of the overall portfolio for the fund, which is why they always say that when the market is flying, these companies are just going to get artificially bigger just because of that. Because I think even if it's 5% of Apple is VOO, then 5 cents of every dollar is going into Apple. But on the flip side, when the market sells off, then some of these companies get hit a lot harder. Let's see. Reasonable to hedge concentration risk by owning VU or SCHD. Yeah. 10 to 50% in the index and everything split amongst your best ideas. I think I could see myself evolving into that because personally for me, I just love having the stability of those big blue chips. And yeah, you know, they're not going to crush it with their growth, but as I'm getting older, I just want that set it and forget it dividend income that we can use to just pay bills. And hey, maybe we'll hit a point where we're going to shoot for being under what 89,500 married filing jointly. You pay nothing on your on the dividends on your income. So, hey, we're going to look at that. But I think that's where I'm starting to shift toward. If I see it in SCHD right now, aside from PepsiCo, if I own it outside of SCHD, I might just sell it, put 75% back into SCHD, and then the other 25% just put into a good idea, like maybe like Algoma Steel. If they keep going the way I think they will go, then that would be something I'll just keep doing something like that. So no Intel. Don't blame you, man. No Intel. Yeah, it's almost like a love-hate type thing, but yeah, she doesn't hedge that way. Agreed. And that comes with knowing exactly what your investor DNA is, right? Everybody's going to have a little bit different DNA than the next person. So yeah, Verizon is the set. Exactly. So that's something I'm thinking about too so that's one I'm struggling with because I also own Verizon quite a bit. I think it's my second biggest overlap. I think I have exposure 5 times to Verizon, but when I look at it, the yield is like over 5%, but SCHD is what, like 3.30 or something like that, right around 3.5, call it. So in my mind, I think of it as stepping down, but there's probably better dividend growth and there's better share price appreciation. So that's one I've been struggling with on Verizon, but you're right. They're a really big portion of, they're a big portion of that. Yeah, PepsiCo is one of the top 10 holdings of SCHD. Let's see. Let's take a look at that. Let me pull up Seeking. Let me pull up the Seeking Alpha. I want to hide your comment first because it's going to get in the way, man. Let's see. The old guy. Look at the old guy fumbling around with doing this. I'm bringing you this time. Don't worry. We got you. We got you. Let's look at those top 10 holdings again. Come on, computer. You can do it. You know I'm live when it sounds like the plane's taking off here. It's like my laptop's getting ready to take off. And we're down and away we go. Come on. Where is it? Here it is. I know I'm covering that, but let's see. So there's your top 10 holdings in SCHD. Broadcom, Verizon number 2, Cisco number 3, Merck, Lockheed, which I do own separate. I could get a lot of SCHD for my Lockheed shares. Texas Instruments, PepsiCo, Coke, Home Depot, BlackRock. Those are your top 10 positions. So yeah, so 40 cents out of every dollar going into SCHD is going into these top 10 holdings, and a 3.42% current dividend yield on SCHD. Interesting. Yeah, 10 years of growth. Just a solid company. I've done a few shorts comparing that to other, kind of unfairly, I guess. So I did one. I did JEPI and SCHD, which SCHD won. Let's see. Terrifying that Verizon is number 2. Yeah, I agree. They're just, as I did in that one video about the warning sign with AT&T, and I pointed out how just the total return has been really paltry on. So you got to wonder, is that going to bring SCHD down with such a high percentage going into Verizon? I don't know. We can talk about it. Oh yeah, I'm in which one, Rocco? I'm drinking bubbly. There we go. I'm drinking the bubbly. It's a PepsiCo product, ticker PEP. Let's see. He's trying the Pepsi Peep. What is Peep? Did you misspell that? Don't even tell me that that's some kind of like Peep. My mind thought of like sparkling water that's like flavored with the Peep, the marshmallow Peeps. That would be disgusting. Hey, those of you that are watching, give me your opinion. What would you like to see ideally from this live stream? When I go live on Sunday, would you just like to talk about whatever comes up from beginning to end? Do you like seeing a little presentation? Would you like, because I kind of want to do this for us. It's not just me. So those of you everyone watching, let me know what you think, what you would like best. Would you just like to do maybe like dividend news right off the bat for 5 minutes, just kind of quickly go through it, talk about that, or just, I don't know. What do you want to see? Let me know what you'd like to see out of a live stream, or any live stream ideally. So we've got the interaction, which, dude, I love this. This is something I look forward to every Sunday. And actually next Sunday, this may be done on Saturday because my daughter has, I don't remember if it's a Saturday and Sunday volleyball tournament or if it's just a Sunday, but either or, until she's done with this, you might see some weird times where I'll be on like a Saturday night or something. But hey, yeah, so let me know what you guys think. Excited to buy Cardinal Health stock. Right. I don't remember this. The good doctors are the very best. Let's see. Oh, okay. God. See, this is the problem too, getting so far behind in the comments. When I ask a question and then I'm getting to somebody's answer 20 minutes later, it sucks, but we'll, yeah. I think RealCan looks pretty interesting, Shamir. But yeah, hey, they come out in 1993. That's the last time that Canadian team won the cup. It's the RealCan curse. I'm telling you, it's a real thing. Munger in his words of wisdom. You know what, dude? That is a word of wisdom from you, is agree or disagree. We should always be reading people that we agree and disagree with, just to see what they have to say, especially those that have been walking around this spinning blue marble longer than we have, because, I think everyone has something to teach, and it's up to us to find out exactly what that is. Target reports next week. Yeah, Target I own outright. That's Lockheed. What do you guys think about? See, that's a tough one for me, because Lockheed I'm up a lot on, and that's in the taxable. So I would have to pay a bunch of taxes on that. So let's see. Target this week. I don't know this. Google, urge you read Praveen. I can't read it, man. Praveen Seshadri's article on the process risk endemic with the business right now. I want to say I've heard varying degrees of smoke. I've heard people reporting on varying degrees of smoke within Google, and not just from within the company, but in Europe, like antitrust litigation and fines and things like that. And now you've got the Chat GPT and the AI specter from Microsoft who really wants to incorporate that, and they're gunning for Google, right? Like Microsoft is gunning for Google, like they want that share. So this is again, which Warren talked about in his shareholder letter, is creative destruction. Joseph Schumpeter's. I'm probably butchering that name. We're so sorry, Joseph Schumpeter, watching from wherever you're watching. But yeah, it's creative destruction, right? One thing gets destroyed, but another amazing thing gets built. And that's kind of what we might be seeing there. You know, they're going to beat each other's brains in, but the benefit will be us. We'll be able to search for things a lot better. Okay, good. This is what I want. In for just a sit and hang, discuss weekly news, bounce ideas off. You know, I like that, man. I like that. And that helps a lot because I honestly, I felt that this morning as I'm going through what I prepared and just thinking like, I'm just talking at you guys. I'm just talking to everybody right now. So let's see. Q&A. Okay, cool. Q&A style finance videos. Let's see. Sorry, brother. Verizon is like utility, high debt, here to stay. Yeah, that's what I thought about Verizon and AT&T. But the more I look, unless something crazy happens, and I don't even know it's crazy, but they're trying to get back to leaner, right? Leaner and meaner, leaner and meter, focused on their core business and growing that way. So I don't know. It's just been a stagnant snail's pace growth, and the dividend is not making up for it when you look at total return and even do dividends reinvested total return. It's just not keeping up. And it's like we just get sucked in by that high yield and fail to look at over the long term how they're performing when you even reinvest dividends, which I don't do. I just collect the dividends and I buy something else. So yeah, cool. Yeah, but I want to do something that's going to be a little bit more, I don't know, just something you guys are going to like a little better. Really? AFCG? Does anybody know AFCG? I don't know. What is that? AFC Gamma. Ooh, a mortgage REIT? 14% yield. I stay away, Jason. I stay away from mortgage REITs, from the M REITs. I've just seen so many bad things with them, and their dividend growth has been, I know, oh, they just started paying one, right? Interesting. They've been raising. I don't know, man. M REITs worry me, but let's see. Chewing on the finest more. Intel should have eliminated the div, but a cut now is better than nothing. That's a good point, Casey. I've thought about that too. And I know there was a Seeking article. There was a Seeking article, Alpha, that I'm going to read later. I don't remember who it was by, but it was in my email, and it said, it was along the lines of if or should or what would happen if AT&T completely eliminated the dividend. And that's interesting. Maybe there's something I can take away from there to do a short or a video or something. But yeah, you know what? Again, if that dividend, right, these businesses are living, breathing entities, and if that dividend becomes a millstone around a company's neck and they can't grow and they can't compete, it just doesn't make sense. And I know it pisses off dividend investors, but dude, that's the golden goose that's paying the dividend. If it's hurting a business to pay the dividend, just cut it, just eliminate it, figure it out, get yourself right? Like it's like talking to a drunk, like just stop drinking, get yourself clean, sort your life out, figure out what you got to do, get things in order, and then maybe one day, you can have a few beers again. But as of right now, it's like you got to stop it. Just sort yourself out, mate. That's from Shaun of the Dead, by the way. Sort yourself out. Let's see. Good one. Yeah. Interesting if you post that, Casey. I'd like to look at that too. Enough. You can never have enough information, I don't think. I can't believe it's already time, dude. Look at this. What do you guys let's see. You need need a lot more help. Nice. Okay, you found the article. Yeah, you know what? Prologis, exactly. And it's funny, this week I just worked at two different Prologis buildings, and one of them we were prepping it, one of them the tenant's in, and another one we we're prepping the equipment because they have a tenant moving in. So they're another well-run company. I think I've talked about this, right? Dude, they repair their equipment. They keep things up nice. They're building new buildings. When they take over a facility or a building, they gut it, they upgrade it, they make it really, really nice. And I'm sure they charge a little bit more of a premium, but yeah, and they're just everywhere. Prologis is everywhere. And if we, that's one I might also just, maybe I'll move from Life Storage into Prologis if Life Storage does get acquired. But again, it's just a business that I understand. It's something I understand very, very well. Yeah, I know you like that, Steve. Again, I think we'll do that then. Right. This guy's got to remember what has two thumbs and forgets to share the screen. It's because I'm moving too quick. I'm trying to rapid fire it, but yeah, maybe we'll do that. Maybe we'll just, but I have to put something on the thumbnail, I think. So maybe I'll just do that, dividend raises or what, you know how it is with us YouTube. We're playing the game. I got to appeal to people that have never heard of me, never watched the channel before, try to entice them to click and watch and get better in that regard. But yeah, maybe for the next 2 or 3, I'll just do that. We'll see how it goes. I'll just do dividend news or just, I'll pick the 3 most impressive dividend stock raises or something newsworthy that happened that week. And that's, we can talk about it like that. But, I thought about that too, why the viewers, there's a few less people watching. It's probably the content. Like, what if somebody doesn't know? It could have been misleading. There could be people that say, like, I don't care what that old fuddy-duddy has to say. That could be. So, nice. Kroger, keep in mind the margins and profitability are not the same thing, right? If I can buy a potato for $1 and sell it for 101, but I can execute that trade 100 times a day, margin is 1%, but profit is 100%. Dude, just love it. Thank you for sharing that, Casey. Thank you so much for sharing that. I love that. Yeah. Margins are always nice, but they aren't always necessary. And, that's one of the things I remember always reading and seeing pointed out about grocers is just that the razor thin margins. But you're right. And that's where size is going to play in and reach. And now extrapolate that to size, to scale, right? So if you just have one grocery store, that's good. But if you have a network across an entire continent or an entire region of a continent, then it's going to scale. It's going to be more. So yeah. Hormel's on Shamir's watch list. Let's see. Value pass-through ability more than margin when it comes to stuff like that. I missed it, you guys. Oh, margin is a safety net to pricing. Nice, true. Yeah, but it's all part of the picture, right? That's why, and good point from both of you. We can't just look at like one thing. It's better to try and take all these little things and look at the big picture and see, and then make your own decision, right? Yeah, ESS. Interesting, man. I'm going to look into them because I just saw that it said residential REIT. So that's going to be cool. I'm going to do not a terrible deep dive, but maybe I'll do a video on them. We'll see. Leggett and Platt. Yeah, I have 100 shares of Leggett and Platt that I'm hanging on to. Let me see. Let me get to the end here. Oh my God. Peep flavored Pepsi. Whoa, that's I'm not a big like sweets or soda guy. I know a few people that are. That just popped in my head. I was like, you got to try this. That's interesting. It's almost time, Cody. Hershey's solid. I don't know what else to say. Easter's coming up. They always right. Hershey's finds a way to represent themselves. Let's see. New Year's or Christmas, New Year's, Valentine's Day, Easter, not more Memorial Day. What's the next big one that they might be? I don't know when Sweetest Day is. Sweetest Day, um, Halloween, right? St. Nicholas Day, Christmas time. So kind of good for them. Yeah, Dividend News recap something. Yeah, I think so. Maybe we'll do that. I'm going to do that the next couple of weeks. We'll just do a really quick Dividend News recap at the beginning, and then just talk about stuff like this, like the Pete Pepsi. And good. This is important because again, I want to foster community with you guys, you know. So I don't want to just like force feed my thoughts and people don't like them. So I want to opening presentation. Yeah, I'm going to do news the next couple weeks. It'll be easier on me, quite honestly, if I just use whatever Simply Safe shows, or I'll go through Market Beat. Actually, how about that? I'll go through Market Beat and I'll do a couple. Maybe I'll do 10 slides or less. We'll do that. I'll do 10 slides or less, and let's see, small presentation. But and with me, as you know, I start to ramble and try and over explain, and it just, I don't want to talk for 15 minutes straight. And then it's just, hey, look, he says Saturdays, give it a try. Hey, I could, yesterday I was busy. I actually worked yesterday, but let's see. Logan, bring that next week. Bring that thought next week. We will look into GPK. Stan, just getting to this now, buddy. Thank you. The SCHD uses a fundamental screen. Yeah, it's not by it. Well, but Casey does point out that they did add a bunch of financials, in 2019, somewhere around there. Let's see. Yeah, I've been buying more. You'll see in the newsletter. Those of you that join, again, newsletter down below. Every Sunday night, I share my portfolio moves for the week and a couple things. Thanks. Yeah, I'm trying to, dude. I'm learning it. I don't want it to be boring, and I'm trying to keep it fun for all of us. Let's see. All right, guys. What do we got? A couple more things let me talk about. Covered calls. Yeah, covered calls on Google. Interesting. I've seen some people do those. I've been looking at, we'll do this next week. WSO. Let's see. Always invest what you know. You know what, Rocco? I agree, but I would add that I think you're not talking about just like, I use Blockbuster Video, I'm buying them. I think that Peter Lynch, what he's saying there is to use that as an idea, as a springboard, because if you know it and you're using that product or service, and other people are, or like me, dude, I'm a subcontractor for Prologis, or Prologis, as I heard somebody call it once. But yeah, I know them. I see the business. I see what they're doing. I see how they're interacting with their tenants. I see how they improve their spaces, and they put money into their business to keep the tenants happy, which is going to keep the shareholders happy. So I think you're right, man. I think it's a good idea springboard for what you know. All right, let's see. Who's going to get the last one? All right, let's see. Yeah, this is fun. I love it. Rocco. Diabetes in a can, man. Pete Pepsi. You know what? Here, let me take a look at that before. We'll go over a minute here. I gotta see this. I gotta see this with you guys. Let's see the good old. Go to the Google machine. We'll see Pete Pepsi. Let me see what's on the can. Is it a yellow can? There it is. They're listening to us talk. Oh my goodness. Look at that. That is a thumbnail if I ever saw one. And they got the blue too. Oh my goodness. Oh, that's on eBay. There, you guys can see that. Look at that, the blue piece. That's disgusting. I don't know, man. I guess I would take a sip at Walmart. There you go, $29.99 for a case of them. I don't know, guys. Peep Pepsi. I'm a shareholder of Pepsi, and I know it's seasonal, but I don't know, man. Let's give it a try. Buying Cisco. There we go. Cisco and Rio Tinto. Fizz, thank you. Cisco, I hold inside of SCHD. Rio Tinto, I have not looked into them. I know they're popular. I know a lot of people are happy with them. And let's see. Oh, cool. Sent the link to your podcast. My grandson's cool and love my chat GPT. I like doing that one too. It's easy, man. I've been using it. And there we go. We'll see. Standalone drink. I agree, Casey. Well, it does sound awful. And guys, again, thank you. Thank you so much for hanging out. And we're going to do news next week. So bring a few ideas we can look into. And again, we'll just chat. We'll share ideas. Hopefully we'll get a few more people in here to share their thoughts, questions we can help them with, anything. I'd love it. I'd love it. Casey, as always, thank you for doing what you do and sharing what you know. We always do appreciate that. And I appreciate you guys for swinging on by the channel for a little bit. Was that enough pausematic draws, everybody? Anybody? Dramatic pause. So hey, I love it, guys. Thank you so much. And I will see you in the next video, and I'll see you right back here next weekend. Peace.